Nepal Rastra Bank, or NRB, stands as the central bank of Nepal. It is the cornerstone of the country's financial system, playing a crucial role in maintaining economic stability and fostering growth. Established in 1956, NRB has been instrumental in guiding the nation towards economic stability and growth. Over the decades, it has evolved to meet the changing needs of the economy, adapting its policies and strategies to address new challenges. NRB acts as the monetary authority responsible for formulating and implementing monetary policy. This involves setting interest rates, controlling inflation, and ensuring that the financial system operates smoothly. It manages the nation's currency, the Nepalese rupee, and regulates the financial sector. By overseeing banks and financial institutions, NRB ensures that they operate in a safe and sound manner, protecting the interests of depositors and maintaining public confidence. NRB's mission is to foster a sound and stable financial system while promoting sustainable economic development. This involves not only maintaining financial stability but also supporting economic growth through various initiatives and programs. The bank's objectives extend beyond mere economic indicators. It aims to create a resilient financial system that can withstand shocks and support long-term growth. NRB strives to create an inclusive financial system, ensuring access to financial services for all segments of society. This includes promoting financial literacy, expanding banking services to rural areas, and encouraging the use of digital financial services. This commitment to inclusivity is crucial for empowering marginalized communities and fostering broad-based economic growth. By providing access to financial services, NRB helps individuals and businesses to save, invest, and grow, contributing to overall economic development. NRB faces a multitude of challenges in its pursuit of economic upliftment for Nepal. These include managing inflation, ensuring financial stability, and promoting sustainable economic growth. From weak monetary policy transmission to underdeveloped financial markets, the path forward requires innovative solutions and strategic interventions. NRB must continuously adapt its policies and strategies to address these challenges and support the country's economic development. The following sections will delve into these challenges and explore potential remedies. By understanding the complexities of the financial system and the broader economy, NRB can develop effective strategies to promote stability and growth. Monetary policy serves as a crucial tool for influencing economic activity. Central banks around the world use it to control inflation, manage employment levels, and stabilize the currency. By adjusting interest rates and other financial levers, they aim to guide the economy towards sustainable growth. However, in Nepal, the Nepal Rastra Bank, NRB, grapples with the issue of weak monetary policy transmission. This challenge is not unique to Nepal, but is particularly pronounced here due to several structural and systemic issues. This means that the intended effects of NRB's policy decisions, such as interest rate adjustments, often fail to translate effectively into the real economy. When the central bank lowers interest rates to encourage borrowing and investment, the expected increase in economic activity is often muted. Several factors contribute to this weak transmission. Understanding these factors is crucial for devising strategies to improve the effectiveness of monetary policy. One prominent factor is the shallowness of Nepal's financial markets. Unlike more developed economies, Nepal's financial sector lacks depth and diversity. There are fewer financial instruments and institutions, which limits the avenues through which monetary policy can influence the economy. The limited development of financial institutions and instruments hinders the smooth flow of credit and liquidity, dampening the impact of monetary policy changes. Banks and financial institutions are often unable to pass on the benefits of lower interest rates to consumers and businesses. Furthermore, the dominance of informal financial channels operating outside the purview of formal banking poses a significant challenge. These informal channels include moneylenders and community-based financial systems that are deeply entrenched in the rural and semi-urban areas of Nepal. These informal channels, while providing credit access in certain segments, often operate with less transparency and regulation, making it difficult for NRB to effectively influence their lending practices. The lack of oversight means that changes in official interest rates have little to no impact on these informal lenders. The consequences of weak monetary policy transmission are substantial. When monetary policy is ineffective, it undermines the central bank's ability to manage the economy. This can lead to persistent inflation, sluggish investment, and prolonged economic downturns. NRB's ability to control inflation, stimulate investment, and manage economic cycles is significantly hampered. This can result in higher costs of living, reduced business growth, and increased unemployment, all of which have far-reaching implications for the overall economic health of the country. This underscores the need for comprehensive reforms to strengthen financial markets and enhance the effectiveness of monetary policy. Such reforms could include developing new financial instruments, improving banking infrastructure, and integrating informal financial channels into the formal economy. By addressing these issues, Nepal can create a more responsive and resilient financial system that better supports economic growth and stability. Remittances, the money sent back to Nepal by its citizens working abroad, constitute a significant portion of the nation's economy. These funds are often lifelines for families, providing essential support for daily living expenses, education, and healthcare. The impact of remittances is felt across various sectors, from rural villages to urban centers. While remittances contribute positively to household incomes, reduce poverty, and boost foreign exchange reserves, an overdependence on this source of income presents inherent risks. Families often rely heavily on these funds, which can lead to a lack of motivation to seek local employment or develop local businesses. This dependency can stifle innovation and entrepreneurship within the country. The inflow of remittances, while beneficial on the surface, can lead to a phenomenon known as Dutch disease. This economic condition occurs when a large influx of foreign currency, like remittances, leads to an appreciation of the local currency. As a result, exports become less competitive on the global market, which can harm domestic industries that rely on exporting goods. This appreciation of the local currency can make it more expensive for other countries to buy Nepalese goods, thereby reducing demand for exports. Local industries such as handicrafts, agriculture, and small-scale manufacturing may suffer as a result. The long-term impact can be detrimental, leading to job losses and a decline in industrial growth. Moreover, excessive reliance on remittances can create complacency in terms of structural reforms and diversification of the economy. Policymakers might delay necessary economic reforms, banking on the steady flow of remittances to keep the economy afloat. This complacency can hinder the development of a robust and self-sustaining economic framework. This over-reliance can make Nepal vulnerable to external shocks, such as economic downturns in remittance-sending countries. For instance, if a country where many Nepalese work experiences a recession, the flow of remittances can decrease sharply. This sudden drop can have a ripple effect, causing financial instability for families and the broader economy. Addressing this challenge requires a multi-pronged approach. It involves not only encouraging the productive use of remittances, but also implementing policies that foster economic diversification. Strategic planning and investment in various sectors can help build a more resilient economy. Encouraging the productive use of remittances, channeling them into investments rather than consumption, is crucial. Families can use these funds to start small businesses, invest in education, or improve agricultural practices. Such investments can create jobs and stimulate local economies, simultaneously fostering domestic industries and diversifying the economy away from remittance dependency is essential for long-term economic resilience. By developing sectors such as tourism, technology, and manufacturing, Nepal can create a more balanced and sustainable economic landscape. This approach not only reduces vulnerability to external shocks, but also promotes inclusive growth and development for all its citizens. Section 4. Stifled growth, underdeveloped financial markets and banking supervision. The development of robust and well-functioning financial markets is paramount for sustainable economic growth. However, Nepal's financial markets remain underdeveloped, posing a significant obstacle to economic progress. The limited availability of sophisticated financial instruments and the shallowness of capital markets hinder investment and economic expansion. Furthermore, the issue of poor banking supervision adds another layer of complexity. Weaknesses in regulatory oversight and enforcement can increase systemic risks within the financial sector, making the economy vulnerable to financial shocks and crises. To address these challenges, Nepal needs to prioritize reforms aimed at deepening its financial markets. This includes developing a wider range of financial instruments, strengthening capital markets, and promoting greater financial literacy among the population. Section 5. The inflationary bite eroding purchasing power. Inflation refers to the general increase in the prices of goods and services over time. While a certain level of inflation is considered normal in a growing economy, high and volatile inflation rates can have detrimental effects on the economy and the livelihoods of its citizens. Nepal has faced persistent challenges with inflation, particularly in recent years. Supply chain disruptions, rising global commodity prices, and fluctuations in the exchange rate have contributed to inflationary pressures. High inflation erodes the purchasing power of consumers, especially those in lower income brackets. NRB employs various monetary policy tools to manage inflation, such as adjusting interest rates and managing liquidity in the system. However, achieving a balance between controlling inflation and fostering economic growth remains a delicate balancing act for the central bank.